Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Moti Oswal studios. I'm Prashant. With me, my colleagues Reema and Nigel. Guys, good morning.
Hi, morning.
Hi, good morning. What an action-packed week. It started with the budget, then the India-US trade deal, now the tech wreck, and it ends with the RBI policy on Friday. But the GIFT Nifty is flat, despite the sell-off that is expected in the IT name. So that's a good sign.
Well, that's right. It's feeling like such a long week, right? We've still got 3 full sessions to go.
We're just midway.
Midway. And Prashant's had a longer one because he's done an all-nighter as well out here. So pull through, Prashant.
It just feels like it should be like a Thursday or a Friday. Not a Wednesday. It doesn't feel like a Wednesday.
Morning. 3 more sessions to go.
Okay, let's just take it from the top, right, in terms of what you need to know as we begin this new session. And there's always something new. And the new thing, of course, was this massive, big sell-off in, IT stocks in the US. And that's the, the screen on your the screen which tells you the story. This is all US-listed companies: Globant, Accenture, 12%, 9.5%, Cognizant 10%, EPAM down 13%. And by the way, it's not as if these stocks bounced. The sell-off started in Europe first, spread through to the US. And I looked at prices at about 10 o'clock, 10:30 last night. And then I looked at prices. These are the closing prices. The closing prices are at the lows or even lower than they were at about 10 o'clock. Gartner was down about 21. Gartner, I think, came up a little bit. The only one which was up about 3%, but 21% fall. And the ADRs, right? Wipro down. The ADRs did recover 5%, and Infosys about 5.5%, but not by much. The reason, if you're thinking about what has happened, is that Anthropic, which is one of the top 3 AI companies in the US, has introduced a range of plugins. I mean, let me put it simply, plugins. The basic problem, which used to be the case, is that general AI assistants were not very well suited to be integrated into companies and the company workflow, etc. So Anthropic is trying to solve for it, and they're introducing these AI. I mean, the AI agents were there, but these are like plugins which can be integrated. The integration part is crucial into enterprise workflow, etc. So this is across a range of functions: sales, marketing, legal, etc., and whatnot. And that, I think, spooked investors in IT services firms, saying that, well, are these very low-cost AI agents now, easier integration, going to eat into the revenue pool for IT services companies? And that's essentially what happened. Now, the IT stocks, and the data is, I think, about 11%, right? IT stocks weight in the Nifty is around 11, 12, 13%. It's been in that range for the last 1.5 years or so. So it's not massive in that sense, the weight. And can it really dampen sentiment on the Nifty? Yes. But you got single stocks in the Nifty with that much weight now. But it's a sentiment thing as well. So keep an eye out with regards to IT services companies. As we start up, there will be a reaction. Now, NASDAQ, it's not as if global markets were sort of higher, but of course it was a reaction function. The reason NASDAQ was down 1.5% is exactly because you had all these companies which also sold off. So, they were pressuring the NASDAQ, and the index showed up with a 1.5% cut. S&P was down about 1%. I was saying this earlier as well. Apple failed to make a move on the upside despite strong results. And something similar happened with, this new company, Palantir, right? Palantir reported numbers. Numbers are like a blowout, and the stock went up 5%. So you have to consider whether global markets themselves, overall, especially in the US, because US has been the clear leader, are starting to look a little weighty. And if that is the case, and on the way up, we did not participate. So on the way down, if there is a leg down in global markets, maybe we will fall less. So relative outperformance, I think, will be there. But you got to be prepared for something. I mean, a bit of a shakeout, pullback. We've seen occasionally those happen, even as growth looks pretty strong. Now, precious metals have all bounced. You've got gold, which was up 6%. You've got silver, which was up about 7% or so. And this is a bounce. Many are still not convinced. And there are serious investors who feel that, well, this is one of those suckers rally which will get everyone in, and then you see another leg down. But this is a space worth closely watching. But for now, we've got a bounce. And this morning in Asia, prices are higher again. Dollar index was down about 0.25%. You got oil prices which have moved up to about 68, but there were 70. They pulled back, and now we're at about $68 or so. Now, I'll just wrap up the India session, right? So there was buying, large buying. FPI has bought about 5,000 crores worth of stocks in cash market, and they covered about 40,000 contracts in terms of their short positions and index futures. I'm not looking at options, but just the index contracts. And they're still short, about roughly 1.6 odd lakh sort of contracts. So, yeah, the short positioning is large. The covering has been pretty meaningful as well. The question is, will there be a couple of days more of follow-through? I think it's possible we have some more follow-through, notwithstanding the IT news flow. But I just want to say one thing, and this is very, it's easier to see. You just look at the Nifty candle from yesterday, right? We had a very, very large open, 1,200 points higher. The market sold off, and we ended with about 600, 650 odd points in gains. So we got a big move on a big news day, which was unexpected, but we couldn't sort of hold on to gains. And I think that is perhaps a bit of a concern worth watching out as well. Maybe during the course of the day yesterday, there were doubts about delay and whether, whether we know all the information, whether there'll be some walk back, et cetera, None of that has happened. So that's good. Mood certainly has changed across the board for the better. The levels for the Nifty, I mean, of course, 26,373 is the high. And that, of course, is the resistance. It's about 70, 80 points away from where we left off yesterday. And support, there was a big gap, right, between day before yesterday and yesterday's open. That gap area of about 200 points, that's the support zone. 25,450 to about 25,640 or so. GIFT Nifty comes up on your screen, gives you a quick sense of how we're likely to start. We'll pick it up from there. 17 odd points lower is the start on the GIFT Nifty. Nigel.
Well, you remember many years ago, right? There was that song, Baby Come Back. It seems yesterday we were singing that song because the FIs, they came back, and they came back actually after a while. Big cash market buying is what we saw, and that, in fact, is something that was missing. So 5,000 crores in a single trading session, I'll tell you what, the bulls will be very, very happy to see them come and participate with nearly around 5,000 crores. So that's pretty good news in terms of the flows that we saw. Well, the number actually, the FI buy number is the highest that we have seen in the last 3 months. So clearly very, very encouraging signs. Besides that, when you looked at the live data yesterday, both on the Nifty open interest as well as the Nifty Bank open interest, it gave you a sense that there is a short covering bounce that's playing out. Because the open interest was lower, both the indices were higher, and the premium on the Nifty futures as well moved up. That gave you a sense that the shorts were covering out and there was fresh long addition. And that's precisely what happened. Just take a look at the FI data. From being very, very aggressively net short, they came back yesterday. They've covered shorts both on the index as well as on the stock futures, as you can see. And they've added some counter long positions as well. So there was a massive, massive short covering bounce that we saw. Keep in mind, the FI short positions are still at around 83%, which is telling you they are net short, but that's far lower than the 92% odd we saw just a few trading sessions ago. The FIs, they have been covering shorts. If you just pull up the last 3 trading sessions, you'll see the FI short positions, it's come down. At peak, it was around 2.2 lakh contracts. That, I think, was on January 23rd. But even the last few days, the FI short contracts, well, they have come down by close to around 45,000 contracts. But the clients that were long, they are gradually going ahead, and they have unwound some long positions as well. So that, that mix actually you like with the FI short and the clients long. But now, in fact, they're relatively less short on the index, though there's still a lot of short covering actually that could play out. Moving to the options data, then the 26,000 call, well, there was clear signs of writing that we saw in yesterday's trading session. However, the 25,500 put, that continues to see some writing, which gives you some hope that the lower levels actually will get defended. So let's get the Nifty levels up for you on the screen. Support comes in at around the 20 as well as the 200 DMA. So the downside levels are very, very important in terms of this range not getting broken out on the downside. However, yesterday's high, the way it got rejected in yesterday's trading session is telling you that the bears would like to defend this high. Remember, Rima just spoke about the tech, the tech trouble that we could have today. So the IT stocks are going to be under pressure. Who can bat for the bulls? I'll be looking at 2 indices. One is the Nifty Bank, and I'm calling Reliance Industries as good as an index because it has 10% weightage on the Nifty. So we'll keep an eye out on both these two. They'll have to offset what the Nifty IT index will do. But I think this market sentiment has changed. So that's why, in fact, till that 20 and the 200 DMA is defended on the downside, you'll want to believe that we have some unfinished business at higher levels. But good going, guys. It's been a while since we saw that kind of FI buying as well as the shots getting squeezed out.
All right, let's get to the equity calls then. It's Surendra Goyal of Citi who says that Q3 results have been largely in line with expectations with an EBITDA growth of 9%. He says at the EBITDA, we've seen largely in line across most of the sectors, barring industrials and healthcare, where there is a significant beat, or utilities and financials, where there are modest misses. India's macro sentiment, he says, is improving tangibly. Major trade deals with EU, US, GST cuts, labor code reforms, manufacturing infrastructure-focused budget announcement, and lower pace of fiscal consolidation versus recent years in the backdrop of low inflation and a 125 basis points cumulative policy cuts. Recent INR depreciation, bond yield increases are areas of concern, but with recent trade deals, some of those should ease. Earnings are on a better footing with recent trends improving. Bottom up, our analysts highlight growth optimism across financials, autos, select industrials, and stable consumer.